When companies have earnings, the implied volatilities of those options go way up, which means we can make some huge money. Then after earnings are announced, those implied volatilities drop like a rock and we either bank the profits or we lose a lot of money. So for that reason, in those companies, we want to do our research prior to the earnings announcements so that we don't get caught and lose a lot of money. We want to be able to determine the direction of the stock, whether it's going to trade within a range or move up or move down so that we can profit. And if for some reason the stock price doesn't move the direction that we wanted it to after earnings, and yeah, it does happen, then we can use the knowledge that we researched to our advantage that others may not know so that we can take advantage of the situation and profit in the next month. In today's video, we review Accenture, FedEx, and Micron earnings trades that we made last week, as well as how we manage the trades on the option trading platform. Hey guys, Darren here. We have a great video for you here today. But first, if you appreciate the research and effort that goes into making these videos, I'd appreciate it if you hit the like and subscribe button. It really helps out the channel and helps to get the video out to more people, so thank you very much. I think it's super important that we understand the tools and strategies that the rich are using to get richer. Then we can use those same tools and strategies to profit for ourselves in any market safely. Be sure to download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. How do we adjust our positions in Accenture, FedEx, and Micron after earnings were announced? In the video that we did last week, we were looking to place the following $10 wide Iron Condor trade in Accenture and collect $260. We had done our research and knew that they were a great company in a great field with AI consulting, and the fundamentals were strong. The short-term and long-term outlook for Accenture was heading upward. However, the stock price is at 52-week highs and fairly valued right at the one-year target of 346 to 347, according to Yahoo. My target was slightly higher at 380. Last time on September 28th, when Accenture reported earnings, they beat and guided lower, and the stock price dropped 15 points. But then the price moved right back up $8 the day after. So overall, it didn't move too much. So I was actually feeling pretty confident Accenture was not going to move too much this time either, considering all the factors. So I doubled down and placed two Iron Condor option trades. I placed a $10 wide Iron Condor in the morning at 7:51 a.m. and collected $205, and then a $15 wide on the call side and $12.50 wide on the put side a little later in the day at 11:33 a.m. and collected another $345. So in total, I collected $550. Well, Accenture beat both on the top and bottom lines and guided right in line. So as expected, the stock price didn't move significantly at all. If we look at the weekly chart, we see that the stock price never even came close to testing the 327.5 short put strike or the 355 short call strikes. We were able to close out both Iron Condors on Tuesday the 19th at 6:37 a.m. right when the market opened and right after the earnings was announced for $46 and $51. So they were both big winners, and we made $453 in just one day on these options earnings trades in Accenture. By the way, we're using the Tastytrade option trading platform. You can do this on any option trading platform or brokerage. However, Tastytrade is one of the best and most intuitive for trading options. These are the guys that developed the Toss Thinkorswim option trading platform and then sold it to TD Ameritrade, and TD and Schwab use it to this day. Tastytrade is even better. Use the link below and you can get cash back when you open an account. I recommend that you open with about $5,000 so you can place several different trades. How do we adjust our position in FedEx after earnings? FedEx was another one that was near the upper range. The short-term and long-term outlook look good. Last time in September, when FedEx reported, the revenue dropped 9% year over year, but operating income increased and the stock jumped. The fundamentals are great for FedEx, and since it's at highs, I expected it not to rocket up, and due to it being such a solid company, I doubt it will drop too much either. So I was looking at another Iron Condor for FedEx. We were going to look to sell the 255-265 put vertical and the 295-305 call vertical and collect around $270. Well, I wasn't quite as confident in FedEx as I was in Accenture, so I only sold one tranche. Good thing. I sold the 260-270 put spread and the 295-305 call spread and collected $347. Well, FedEx missed on both the top and bottom lines. The biggest reason was their express unit business was down. We even saw this and covered it in our research. Zach's talked about their express unit performance expecting to be down. I should have listened. I didn't know it was going to affect the stock price like it did. Well, we can see that the morning following the earnings announcement, the FedEx stock price dropped like a rock down to the 245 to 250 range. So we were full, complete losers at that point. Right away, I could see that this was going to be the full loser. So I closed for $960. Since I collected $347 when I placed the trade, it was a $613 loser. Now, having done my homework, I knew that FedEx was now a great buy at this level. The fundamentals were solid. The long-term target that I had was the 280 to 300 range, and I thought it was still achievable and way above where the stock is now at the 245 level. They just needed to adjust their express strategy a little, which I'm sure that they will. Maybe it was just that their standard business, which performed well, was what most people were using. That may change after Christmas. So I'm confident that FedEx will not drop further and will inch its way back up to the previous higher levels that it was at fairly quickly, especially since the overall economic outlook for the market is good for next year. So I'd like to look at this trade as not so much a loser, but more of an entry point that is going to be profitable in the next month or two. However, I'm really just focused on getting back to even or slightly profitable in FedEx at this point. If we can win on some trades and on the ones that we don't win on right away, then turn them into winners in the next month or two with a roll or two, then we can basically just print money. So I immediately sold two more Iron Condors in FedEx, this time skewed a little to the upside. I did it right when the market opened at 6:33 a.m. to try and get in when the IV was still decently high while it was dropping. I collected $325 and $318 for selling the new Iron Condors. So right in the $600 range in total to make up for the amount lost on the initial earnings trade. I then added another put vertical for good measure to slam it even more to the upside and hopefully make a little money for all the work rather than just break even. So now, if you look at the curve mode on the Tasty Trade platform, you can see the green profit range and that we are profitable all the way down to just below the 240 price and all the way up to about 270. You can see our P&L at expiration will be $868. So we will make up the original $613 that we lost on the opening trade and even make a couple $100 additional. Now that earnings have been announced, I'm pretty confident that it won't drop too much more since it already dropped big and the poor express unit sales have been taken into account. Also, it likely won't skyrocket up for the same exact reason. They need to improve their express unit sales, which I'm sure they will. The last one that we're going to look at right now is Micron, ticker symbol MU. How do we manage Micron after they announced earnings? Be sure and check out all the history in the video from last week on Micron. It details the reasons that we like the company and why we were going to place an Iron Condor option trade. We were going to look to sell the $5 wide 73.78 put spread and the 85.90 call spread to collect $150. I actually ended up going smaller and just doing a $3 wide 75.78 86.89 Iron Condor and collecting just $92, so close to 1/3 the width of the strike. I wish I did 10 contracts and went bigger. Well, Micron missed earnings and the stock went up. Yeah, figure. They missed on earnings but guided higher based on increased DRAM and NAND pricing expectations. So this one I just closed out for $30 and took the $62 winner shortly after the market opened. All right, guys. So for winners like Accenture and Micron, we just take them off for the quick profits and we're done with them. The losers, I don't look at them as losers. They're just delayed winners. When any of these stock prices move outside our range, then we can close and recenter in the next monthly option cycle and collect additional premium. That is, as long as it coincides with our homework and our long-term outlook for the companies. All right, guys, if you're a beginner and this sounded a little confusing, don't worry. It did for me as well at first. We'll continue to learn together and succeed in future videos. Be sure and download the free options workshop in the link below. Remember to hit like and subscribe, leave a comment, ask a question, let me know what you're trading. I answer every question. See you in the next video. Thanks for watching.